Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So today, as usual, we have prepared a weekly report. The only problem, guys, that we were not able to put on directly on the forum. So in a thread on the forum, you will get the link on cloud storage of the FPA, so you could read the report in RTF text. So all links are working there. So it's just some technical issues. It's just holidays right now. We will try to fix it as soon as possible. Sorry for any inconvenience, but in general, report easily could be read, and so I don't think that you will get any big problems with that. So all charts, links to the charts are working. So it's just a bit different way this time. In the report, we have tried to take a look at the current consensus on the 2023 outlook for the gold market. And the cornerstone, the background of the gold performance in 2023 definitely will be the Fed policy. And we in general agree with the major thing that rates probably will stay hold in next year, so hardly will get the big hiking process on any central bank. But at the same time, we're not quite agree with the reasons why this would happen, and we're not agree probably with the inflation performance. So currently it's widely anticipated and expected that inflation should start dropping somewhere back to the estimated targets in 2024 into 2%. We suggest that, well, we have big doubts on this subject, and we think that central banks will start easing not because of the inflation decreasing, but just because they will just spend all the possible resources to support markets, and they will not have any other chance to support the economy but turning to the easing. So that is our position. That actually makes the big difference with the overall market anticipating of the performance. And second, by our view, market strongly undervalue the global political risks. So this leads to some mispricing of the gold and keeps it undervalued. So we think that the geopolitical risks will be significantly greater than currently is widely expected. That makes us have the positive look in 2023 in general. So if even real rates could move higher slightly, although we think that hardly will happen, we do not think that this will lead to some collapse on the gold market, something of that sort. So most negative scenario that we suggested may be some sideways action through the year, but our central scenario suggests that upward trend should be reestablished on the gold market. So speaking on technical side, mostly everything stands the same as we said, where it should be really careful with any bearish positions right now, and as we decided and agreed last week, it would be better to stay aside for a while. But a few reasons. First of all, the overall performance here doesn't look bearish. More and more signs of the bullish dynamic pressure, since you can see the divergence between the price action and MACD. So it suggests that market could keep going higher. Besides, in the previous few weeks, we already have seen multiple erasing of the grubbers, big patterns, including our 3 drive that also has been cancelled. So with this background, I think that we need to get some more confidence before taking the short position. So some more bearish action before taking the new bearish position. Besides, today we recalculated the pivot points, yearly pivot. Pivots for a new year, and pivot point right now stands at 1836. It's very close to the current market, and there's really big chances that market will try to test it. And we suggest that in the short term, the way how market will perform around the pivot, yearly pivot, it could be the key to following performance on the market. So if market will fail to break it up, it will mean that we should get deep retracement, and that will be big support for our idea of a possible downward retracement. So personally, guys, I still would like to get this head and shoulders pattern. That could be really the jewel in the diamond of the reversal process. So, but we'll see what will happen. If somehow market still will break it up, 1836, it means that probably we will not get any hand and shoulders, but we get straightforward upward action. In current circumstances, these chances for this scenario are not really big. In a lower time frame, on the 4-hour time frame chart, mostly we are watching for the same pattern. And as we said before taking the short position, it would be nice if we would get a breakout of this consolidation. That could let us chance to take the short position. But currently it hasn't happened. That's why I prefer to not take the short position right there. Besides, with all the stuff that we have just discussed, the bullish scenario, well, has not less chance to happen than the bearish, and why we couldn't get this type of action. Take a look, our Friday action has been complete. Market hits the XOP, showing some few pullbacks out from the resistance level. If you remember, here is also the 618 level. But this performance doesn't, well, correspond to idea of the bearish reversal and downside continuation. It is too stubborn around this level. So it reminds more as a consolidation after target has been reached, rather than process of the downside reversal. And from that standpoint, well, I wouldn't absolutely be surprised if I will get something like that. Butterfly pattern with the touching of the pivot, yearly pivot point, and the action to the 1843 area. Besides, on the weekly chart, major resistance stands 1852, so market easily and without any problems could fluctuate in this wide range. That's what we have currently. So theoretically, if you would like to, you even could consider taking the long position here with this possible butterfly. If we get some pullback here, so it's also not forbidden. It's one of the patterns that also could be considered. But speaking about the bearish position, I wouldn't take it right now. So just because of the performance of the gold market in recent few weeks, and by the way, by the cross market analysis as well. So if you have read our recent report on the Forex market, you understand what I'm talking about. So that's our short-term view on the gold market.